welcome back, everybody. Welcome back, welcome back. For our next presenter, I would love to introduce Meaghan Dowd. Meaghan is our Director of Product for Insurance. She's an insurance mastermind. And today she's going to be talking to us all about how insurance is not just shopping apples to apples. And with that, Meaghan, I'll hand it over to you.
Thank you so much. Let me share my screen. Alrighty, you can see my screen, Laura? Okay,
Yes, looks good.
thank you. Alrighty, so why shopping is not just apples to apples. We're going to cover quite a few things today. So we'll talk through why it's more than just price, considerations before shopping, things to consider while you shop, why buying insurance is actually not the last step in the process. I obviously have some shopping stories to share with you all, and then really how Holistic Plan can help redesign that shopping experience for your client. So again, what you'll learn is how to help clients shop for more than just savings, because if that's all they're looking for, it can really cost them in the long run. We'll talk through tips to avoid shopping pitfalls. And then again, really just help you guys utilize the Holistic Plan risk management tool to allow your clients to be smarter shoppers. So, when we say shop, what does that really mean? Typically, shopping means that you're looking at multiple insurance companies to compare price. So, usually that's, your home, auto, umbrella, maybe some valuables, watercraft. But typically, when you go to shop, there is some type of savings that is wanted at the end of that. And again, that better rate is really the goal. However, if that's your only goal when you go to shop, there's a lot of missed opportunities. Anywhere from your clients don't actually know what coverages they need, and shopping won't reveal that. It just can duplicate the issues. They risk their current policy, like what it doesn't cover, and then they don't really know if they're underinsured or overexposed. And those are all things that make this shopping experience overwhelming at times. And shopping just shows you the cost, not the completeness of their protection. And so, what affects clients' pricing? So first is their insurance score. The insurance industry will be very clear that this is not a credit score; it's an insurance score. Credit does, though, have an impact on this, and obviously, the higher your insurance score is, the lower your rate, and vice versa. If you have a low insurance score, you're going to pay a little more. Every insurance company looks at insurance scores differently. So sometimes, if your clients have really good credit scores, you'll notice that like a direct writer may not really give them as many credits for having a good credit score or insurance score. Whereas some of the high net worth carriers, if you do have a good insurance score, you'll get their best pricing. And that's where sometimes we see clients have the ability to go from a standard market to a high net worth carrier without spending too much more, because they do have a good insurance score and they're getting some credit for that on that new carrier. Location matters. So, obviously, if you've lived in the same place for a while, you understand kind of the ins and outs of your location, whether that's catastrophe exposures like hurricanes or hails, or maybe it's just local crime in the area. So, I see a lot of times when clients go to move, especially out of state, but sometimes it's just zip codes to where their pricing changes significantly. I actually moved a few years ago from St. Louis City out to St. Louis County, and my auto rates dropped $1,000 a year just by moving zip codes. It's not even a 10-minute drive, but it just shows you how much the location of homes and where the vehicles are stored can really impact the overall cost of insurance. Claims history. So, obviously, we all know that when you file most claims, you're going to see some type of surcharge for that claim. But people don't always understand is there's a frequency issue. And sometimes we see this a lot with like glass claims or roadside assistant claims, where clients will use the insurance because that's what insurance is for. But then they find themselves they can't shop, or when they go to shop, they're not getting the preferred rates. And that's because they've used their insurance too many times. And from an insurance perspective, that's kind of a red flag. And then deductible choices. Obviously, pretty simple. Higher deductibles usually equal lower monthly costs, and vice versa. If you want to carry lower deductibles, you tend to pay a higher premium. I understand the math behind both of them, but I think it's really important to remember your clients aren't writing a deductible check every year. They are writing a premium check every year. And so you understand your client's liquidity probably better than anyone in their circle of trust. So you know if they can write a $2,000 check or a $10,000 check. Not that they want to do that every year, but if they have a claim, can they comfortably write those checks without it disrupting their lifestyle? And that's where, again, you all can have or help your clients become more comfortable with their deductible choice, especially as they go out to shop the market. So now that we take it out of the client's hands, what affects rates that the insurance companies kind of have a say in? So one is coverage form. So obviously the broader the coverage form, the higher the cost because broader coverage means there's more losses that will be covered. So that's going to be the difference between like an HO3 policy for homeowners and an HO5, which the HO3 only covers listed perils for your personal property, where the HO5 is going to cover open perils for your personal property, meaning everything is covered unless specifically excluded. And you do, again, pay a little bit more for that. There's also differences in policy terms and exclusions, and every company files different forms with states. And that also means just because there's a coverage available in one state, we'll just use State Farm, that's not always means that coverage is available in all states. So cyber coverage may be something that companies start to roll out as we start to see. And as they roll it out, again, it's not always available. And as you move or as you shop, you might lose some of those available types of limitations. There's also financial ratings. So insurance companies, like most businesses, they have financial ratings. And a strong rating usually means they're more stable. Again, you do tend to pay a higher price with that. The lower rates, again, tend to come with those cheaper but riskier forms. Uh, AM Best rating is the best place to go for your clients. There's also demo tech ratings in like the states of Florida where we see more of those catastrophe type areas. But I do think, again, as an advisor, as your clients shop, and if there is a significant savings in that price, potentially just checking the financial rating of that carrier to make sure they're not going from like an A rated or A rated carrier to a B rated carrier. Again, there's also different endorsements that are available. So companies get to decide the types of endorsements they want to include in most situations. So cyber is the perfect example where not all companies offer it. And so as you start to shop, you might assume, hey, I gave them my deck page and it has cyber on it today. They're definitely going to put cyber on the new quote. They may want to, but the company that that insurance agent represents may not have that available endorsement, which just allows them to leave that off the quote. And it's not always discussed that the endorsements don't quote unquote match that apples to apples that the client's intending for. And then lastly is this admitted versus non-admitted. So in today's market, we are seeing a lot more non-admitted companies in the space. And the basic gist is an admitted company is state approved. They do have some financial backing that varies based on the state you're in. Whereas non-admitted carriers, they do have more flexibility. However, they're not guaranteed by the state. So if there is a large loss and the insurance company cannot write the check for that damage, your clients really don't have any backup. So those are kind of the four main pieces that we see on like why insurance companies charge different rates across the board. And so shopping for consumers is hard. It's not just a price, it's a maze of people, policies, and pitfalls. So, first is like, where do you go to start shopping? Do you go online? Do you go find an agent? And then, if you want to find an agent, do you use a captive agent? Do you use an independent broker? Or do you maybe go to your mortgage person and ask if they know someone? So, where to even start shopping can be overwhelming. And really, the difference between the types of providers is a captive agent typically works with one insurance company. So again, that's gonna be your State Farms of the world, potentially your Liberty Mutuals and those sorts of individuals. They have a great product, but if you go to shop, they're only going to look at one option. Where an independent broker, they represent multiple companies. So they might have a Travelers, a Safeco, a Cincinnati, a Chubb. And so when you ask them to shop on your behalf, they do get to go to multiple different markets and are actually shopping for your clients. One of the misconceptions, though, about independent brokers is they all have the same contracts, and that is not true. So if I wanted to shop with Marsh and McLennan, who is a very big insurance broker, they're going to have different companies than like a Powers Insurance. That's just more of a local boutique type broker. So again, understanding your client's needs, even going to the right independent broker can be a little overwhelming. And then lastly, banks and mortgages. This again is sometimes where your clients start to shop. Maybe they've lived in the same home for 20 years and now they're buying a new home and their mortgage person's like, oh, I have a person for you. They can just shop everything, give them a call. This is good. It's always nice to know someone, but there's also just, again, a different perspective sometimes when the introduction starts with the mortgage lender and that they want the cheapest price because obviously they want their clients to have the cheapest mortgage payment. And that doesn't always correlate with the best coverages. So, again, where do clients even start can be one of the first hurdles that make shopping difficult. Next is they don't always know what they look for. If you've been in any of my recent webinars, I think the stats right around 21% of clients don't know that coverages exist for their needs. So that could be anything from, again, those lifestyle risk of sitting on non for profit boards as a director or officer, having a nanny or a home health care worker in their home taking care of their family and loved ones. So just a lot of different things that clients, one, assume is automatically covered already on their insurance or don't know that it's actually a liability exposure or an exposure to their assets that they could transfer to the insurance carrier. And then lastly, it's so hard to compare policies, even as someone who did this as a living. A lot of times, insurance companies just want to provide deck pages, but the reality is there's so much more than a deck page when it comes to comparing. It's about the languages, the exclusions, potentially the conditions, and they all don't match. And again, even moving from one state to another, you might decide to stay with pure insurance, but you move from Missouri to Texas, those policy forms may change at a very minimum, the exclusions may change or the conditions. So it's really hard for the everyday person to really be able to read in depth and compare their policies because at the end of the day, insurance is a very badly written contract with a lot of legal terms and it all just depends. And you won't know until the time of a loss and or again you read the 90 pages to know how that's going to affect your client. So this is where advisors can really start to lean on holistic plans. So shopping doesn't have to be as hard. Even if you might not be able to put them in touch with the right provider, you can help them with steps 2 and 3 and understanding what language may matter to them and or what gaps they may need to be looking for from a lifestyle exposure. And then before shopping, it is important to consider your current coverages and potentially what adjustments you can make there. So before you go to shop, consider deductible options. Consider things like, going from that $500 deductible to maybe a $2,500 deductible. A lot of times the savings can be a couple $100. We'll just say 500 to keep the math easy. And so while telling my client to increase their deductible by $2,000, I am going to save them $500 a year. And to keep math simple, over 4 years, they'll saved about $2,000. And so on year five, they basically made that deductible difference up in savings on the policy. Obviously, insurance companies take rate every year. So the math isn't that simple, unfortunately, but it's still a great way to help your clients understand that they can potentially go to a higher deductible because they're not writing that check every day, but they are writing the premium check at least once a year. Coverage options. So sometimes people have a lot of endorsements that might not always be necessary based on one, their risk comfort, and or two, if they go to shop the market, those may not be available. So that can be anything from service line coverage, which covers those exterior lines that run waste from your home to the main sewer lines. That's a nice to have endorsement, but it's not always necessary. While it could be $10,000 to repair that line, and it would put some of us in a financial hardship, it probably wouldn't leave us in a catastrophic type financial state where maybe earthquake would. And so being able to understand what coverages or endorsements are really catastrophic that you need to transfer to insurance or ones your clients are a little bit comfortable self-insuring could again be some adjustments to make in the meantime. Another big thing is the home and vehicle ready for inspection? And we'll talk about this a little more, but a lot of times if your clients do shop, they're going to have their home inspected. And if they've been with the same insurance company for 10 or 15 years, their home may not be ready for a insurance company to come even just to the exterior with the fine tooth comb and start picking on things that are honestly maintenance, but from an insurance company's perspective, a risk. So that could be cracks in the sidewalk to trees. And again, a lot can happen during those inspections, and we'll take a deeper dive. And then in some states like New York, your vehicles sometimes have to have inspections before you can move to a new company. So just understanding, is the vehicle, again, in a shape where it can continue to keep full coverage based on the appearance. And then lastly, is the savings really worth the hassle? Like I described earlier, there's a lot of different places where clients can start the shopping experience. And sometimes they can spend a lot of time just giving their information to different people, doing it during business hours or their time that they could be spending with family. And sometimes that savings is $200 or $300. And is that really worth it? Or again, if it's a couple thousand, then we're having a different conversation. But in most situations in today's market, when clients are shopping, if especially if they're getting the exact same coverage as they have today, there's not going to be a lot of savings in it. And what they will be looking for is what we'll talk through and how Plan can make that a slightly better experience. Again, just to lean into this, if the home is not updated, do not shop it. The roof age matters in most states. If the roof's over 15 years old, there's going to be limited markets to no markets. And if your client is with a carrier and their roof has hit the age of 15, nothing usually happens. There might be some adjustments to the policy, but if they go to market with the 15-year-old roof, that's where we start to see a lot of complications. The other thing I've seen when clients go to shop is they put on a new roof, but all they're doing is adding a second layer of shingle to the existing roof so it looks aesthetically new. But in all reality, a lot of times that's ineligible with insurance carriers and just ends up causing more water damage than solving. So understanding the client's roof and its updates are, again, kind of an indicator for you to help encourage them to shop or maybe see it as a red flag because it could end up causing more homework or harm than help. Plumbing. This is something that, again, most people, they buy a home, they do the inspections, but they don't remember the type of plumbing they have in their home. Some do, not all, but galvanized, cast iron, those types of plumbings are not always acceptable by insurance carriers. And these are the types of questions that not a lot of agents ask when your clients start to shop because they want to close a deal. They assume if your clients had this, they would bring it to their attention, and your clients assume the agents are going to ask the right questions. And this is where assuming just puts us all in a really bad position. And it's not just plumbing, it's electric. So there's also things like knob and tube wiring and aluminum wiring that aren't eligible in new business. And this is where we see clients that have been with carriers for a long time, maybe grandfathered in to eligibility because they have knob or tube or aluminum wiring. But let's say they leave that insurance company to go get a better price somewhere else. And then there's an inspection, and that inspector says, "Oh, hey, you have knob and tube wiring. We're getting off this policy in 60 days." And now your client wants to go back to that old policy they were on, they may not be eligible because that knob and tube wiring is an updated underwriting eligibility guideline that does not qualify them from a new business standpoint. So again, this is where sometimes shopping and jumping too quickly can leave them in a bad position to where they can't even go back to where they were before. And then the age of the HVAC matters. A lot of times, if it's over 20 years old, the companies aren't huge fans of it and won't allow it to be written as new business. And then the fuel type matters. We recently had a client who has a propane tank that is stored underground, and that was leaving some hardship in her finding some good coverages outside of what she had. We actually had an option that was quite a bit of savings, but again, and going through a little bit deeper on her fuel type, they learned that the tank was underground, which disqualified her from that potential savings she was hoping to get. So, again, these all aren't like complete stoppers, but definitely red flags if you know any of these about your clients or you've heard them talk about any of these exposures and maybe why, if they do shop, they need to be very clear in disclosing all of this so there's no issues at time of a claim. And oftentimes there's some benefits that are often overlooked in the current policy while clients are chasing this savings idea. So one is this diminishing deductible and subscribers account. So diminishing deductibles, there can be bells and whistles added to your client's home and auto policies to where every year they go without a claim, they get a dollar amount taken off their deductible. So a lot of times we see this on auto to where if the client every 6 months goes without a claim, they get a $50 credit towards their deductible. So they have a $500 auto deductible. They've gone, 2 years without a claim. That's $200. And now their out of pocket's only going to be $300. And again, if they go to shop and they leave, they lose that. And now they're back to that $500 deductible that they're paying at time of a claim. There's also a subscribers account. So there are different types of insurance companies, and one of them is like a farmers and a pure, and they're a mutual company to where the actual policy holders own a portion of that. And so every year when the company does good, they get a little money back either in a check or in a subscribers account. And sometimes if you leave before a certain date, so sometimes it's 5 years, it all varies between companies, you might not get that subscriber account dollars back. So again, those are just a few things that clients tend to overlook. Another one are things like specific endorsements. Guaranteed renewability is one that we see a lot of times. Telematics. So this is a discount your clients will get on their auto policies, and it can be a nice discount. Sometimes it's 20 to 30%, and they probably spent about 90 days being tracked in order to earn that discount. And if they move insurance companies, that discount does not follow them. And if they would want to earn a telematics discount again, they would have to go back through that process. Some clients don't care, but some do get a little frustrated that it's not like portable based on carriers. And then obviously there is some longevity credits and benefits. We recently had a review come through a Holista plan, and the client had been with a company for like 15 years, and it said on the declaration page that they weren't going to surcharge for claims. So that's a great benefit. That means your client can get in an auto accident and they're not going to see their rates jump up because of that at fault accident. And again, that can be a really nice benefit as they bring on younger drivers to the policy. Maybe they're getting older and it's their first accident in 70 years. There's just a lot of different stories, but those credits and benefits can be very meaningful to your client. So again, these are just items that might already be part of your client's policy that can be overlooked and lost if they decide to shop and move. So then there's some things to think about while clients are shopping. And these are kind of the three biggest red flags. One is if they ask limited questions. If they just want to know your client's address, name, and date of birth, they're just looking to get them a very low rate. And while there's a lot of data out in this world that we can gather with just those three pieces of information on the insurance side, there's so much lifestyle questions that really should be asked, and additional fact finding if the insurance agent's true intent is to find the right coverage for your client and not just the best price. The other is pushy sales. If they want your clients to buy that quote on the phone, have them walk away. Most insurance quotes are good for 15 to 30 days, depending on the company that you're getting quotes from. And so there really is never a need for them to make a decision at the point of getting a quote or getting a price. They should always be able to call back after they review the documents, digest the information, and then make that decision. And then lastly, vague quotes. If the insurance agent's not willing to send the quotes to the client, or they just want to send them like an email with three bullet points about that quote, that should be a red flag that there's probably things within that quote, whether it's limitations or exclusions, that might not be in the client's best interest, that that agent does not want to showcase to jeopardize the sale. And so, this term apples to apples, I didn't ever know about it until I got into insurance 15 years ago. And it was always interesting when people would say, I want apples to apples quotes, because what does that really mean? And what I've learned is it means that they just want me to match what they currently have. They want me to match their dwelling limits, match their deductibles, and just be an order taker for them. This is an easy way for me as an agent to get quotes, but I often assume that the current coverages are correct which is not always the case. And what this ends up doing is it duplicates gaps that already exist. I am ignoring hidden exposure. So my clients, again, still have potentially large gaps out there that aren't being addressed, even though they're putting the time and energy into shopping their insurance. And there's key differences that are missed from endorsements to state specific variation. So really, we used to say it's apples to oranges when we're comparing companies a lot of times, because truly comparing apples to apples can become very difficult, even if it's two high net worth or two standard companies. There, again, claims, endorsements, policy language does just vary quite a bit. So if anyone says I'm getting apples to apples quotes from your client's perspective, warn them against that comparison. And if an insurance agent says I love giving apples to apples quotes, that's probably not the best agent for you to be working with, because again, they're not always finding the gaps in the true needs of your clients. So, how do we shop smarter? One is really reflect on the client's lifestyle today. Are there any known gaps or exclusions or maybe outdated limits? And when I say outdated limits, this could be like, they recently updated their kitchen and you ask them, have you told your insurance professional about the new upgrades, the granite countertops, the custom cabinetry? And if they say no, that might be a great reason to start shopping with the intent of, hey, we've done upgrades to our home, we want to make sure the coverage is correct and not just, hey, we're looking for a better price and nothing's changed. And again, Holistic Plan can help you start the process right. Don't copy and paste what's in place. Again, that's duplicating existing mistakes. Maybe they have animals on property or they've recently put a trampoline on the property for a Christmas present or a birthday present. And the new agent that's quoting is just including those exclusions because they're in there. It helps save on price. But come to find out, again, their lifestyle has changed since they bought the old policy that they're now shopping. And these are actually true exposures that need to be caught in this experience. And again, if we're not talking about our lives with these insurance professionals, these are what's missed. And to be clear, advisors have built some of the closest trust that clients can have. When I was on the insurance side, getting people to even tell me their date of birth was hard sometimes. So this is why I do truly believe advisors can be that bridge between insurance professionals and clients, because you know what insurance professionals need to know, and sharing that information with insurance professionals only does your client a huge favor in offering them the proper protection. And then understanding the policy differences. So, again, not all policies are built the same, from water backup to personal property. You would be shocked how many times I would see one of my clients go and shop their policies and they come back and the personal property was actual cash value, meaning there's depreciation taken into account and all these other things. And no wonder they're saving money when they got that quote. They've just lost a huge coverage option that really would leave them exposed, even if they had a minor loss, not even a major loss, when your personal property is on that actual cash value. And again, what's actually covered, not just what does it cost. I think the commercials in today's world have really brainwashed washed us all to think that you can save 15% in 15 minutes. And if you're not saving, you're doing something wrong. And that's just not the case. There's very little savings to be had in personal insurance today. And if you're saving, you're probably, not always, but probably losing some coverages. Again, the case where you could be getting the same coverages at a better price is that credit score or the insurance score example I gave earlier, where if you have a really good insurance score and your current carrier doesn't give any credits for that, and you go to a company that does give credits, you might see a lower price for similar coverage. So, what most people don't consider before they move is some companies actually have minimum earned premium. So, this isn't standard. This is something clients tend to have heard. One of their friends went through a story where they moved insurance companies, then they went to cancel and it wasn't prorated. But a lot of times, this minimum earned premium does appear in that non admitted market. So, in areas that are hard to insure, if your clients start to shop or they move and they cancel before the end of the policy term, and all of those premiums may not be refunded. Where with the standard carrier, if I cancel midterm, I get 50% of the premium I paid back based on that language. Again, this time and effort, it does take a lot of time to shop, whether it's just gathering the information, talking to insurance professionals, understanding the difference between quotes. There's paperwork, there's emails and back and forth. Like shopping insurance does take time away from other things that could potentially be more productive based on the client's needs. And when our clients go to quote, there are so many assumptions being made. Agents do their best, but they don't always go into details, especially if a client's like, hey, I'm just looking to get some better pricing. I need something quick. What can you do? They may just assume as an agent they have a newer roof because they know if they put something older, they're not even going to get a quote to present to that client. They may assume they don't have dogs because if they have a dog, such as a pit bull, that might not be eligible for their insurance company. So they're going to just select no because they just want to get a quote out the door. Or again, maybe they'll assume there's been no prior losses. And those are all eligibility factors that, again, being assumed during the quoting process can really leave your clients in a difficult situation on the back end, which is why it's important for us to educate our clients to let these individuals know when they are shopping about the age of their roof. Let them know about their dogs and their trampolines and if they've had losses and maybe the frustration with those losses and what they'd be looking for out of the new company to solve if they had another claim. And then lastly, it's agreeing to incorrect information. So sometimes clients get those quotes. Again, they were quoted with assumptions, but they like the price. So they say, yes, let's go. They sign the 4 or 5 page application, which is an accord form a lot of times. That is really hard to read, but there is very, very important information that your clients are agreeing to there. Sometimes it could be, again, agreeing to the roof is newer or that there's no animals on premise. And once they sign that application, if a loss occurs and they didn't intentionally falsify that application, but it is inaccurate, that company, insurance company, can now potentially decline that claim. So if you said you didn't have a dog bites someone, and then the insurance company comes to find out that you own the dog prior to the start of the policy period and you didn't acknowledge that on the application, it puts your clients in a really bad position. So this is where also making sure if they are shopping, they are disclosing all that information and not signing applications without reviewing them, because it happens way more than people would probably like to admit that they're just again not reading and signing documents. So, what are some common mistakes that folks make while they're shopping? One is they go to lower coverages. So, they often don't realize that maybe the dwelling limit matches, but then the other structures coverage is lower, or the personal property limit is lower, or maybe the water backup went from policy limits, which would be whatever the dwelling limit is, down to 10,000. I've also seen where insurance companies are limiting water damage. So that means if your client's pipe bursts, the max they're going to get is $10,000, but that's not always shown in the declaration page. Again, lost or overlooked coverages. So maybe your clients have worldwide liability today, but when they go to shop, they don't realize that they're losing that, or maybe there's some exclusions or reductions. Claims experience. This is a big one. Especially if your clients are with high net worth carriers, they might be able to go find some better pricing for what, again, looks to be similar coverages, but then they're going to have a claim. And instead of just getting that check written at time of loss, they're now going to have to go back and forth with an adjuster. They're going to have to come up with a list of personal property items. They may have to get 3 or 4 bids from different contractors before the work can start. So these are the types of things that, especially if a client has experienced a claim, and I used to say this when I was on the broker side, I loved when a client had a claim because they either had one perspective on they wanted the claim to go differently, or they loved how the claim was handled so much that claim experience mattered. And depending on those stories would help me put them with an appropriate carrier. And again, sometimes that meant spending a little bit more because they wanted to have that broader coverage. And an example would be I had a client who had a loss. They had a white carpet in their condo, and the loss occurred in the bedroom. And the carrier that they had been with prior to us only wanted to replace the white carpet in the bedroom. If anyone has ever had white carpet, after about 2 weeks of it being installed, even if you're the cleanest person, there can be a slight variation in what that white now looks like. Um, they hated that they couldn't replace all of the carpet. So when I went to market, I made sure that we went with a company that would replace it when there wasn't any type of seam or anything to help with that transition. So there are companies out there that would have replaced all of the white carpet in the bedroom and living room where it went out to keep it consistent. And so there wasn't that color difference. We also see this with like roofs and siding a lot of times, and endorsements being able to be added. And then missing info. You would be shocked how many times, again, clients don't always look at quotes. They look at that dollar amount, they see savings, they see dollar signs in their eyes, they get really happy. But what they didn't know is maybe there's now an excluded driver, or they missed their 16-year-old son because it didn't pull up in the list of household drivers because he just turned 16. So there's a lot that can happen during the quoting process, from assumptions to just plain missing things that cause the shopping experience to unravel very quickly. And then let's say your clients have done their due diligence, they've looked at both policies, they are going to move forward with that quote. What happens next? So, ideally, the insurance agent is already going to have run the claims report, which is the MVR, which looks at like if they've had any speeding tickets, moving violations from their vehicles. And then a clue is going to look at like auto accidents or your home claims, like hail damage and those sorts of things. If the reports are not run until what's called binding, that means your clients may not have a firm price, because obviously, if they have any activity on these MBR or Clue, that's going to change the rate. So it's very important that before your client gives them their credit card information, they've asked, have the claims reports been run? Is the MVR and Clue clean? And are we good to go? If they are not, again, they may hand them their credit card, that agent hits submit, and now they're like, oh, just so you know, your down payment is no longer $200, it's now $450 because you didn't tell me about the speeding ticket you got last summer. And your client's going to say, well, I thought you would have already run these reports. And it just, again, becomes an unfortunate situation that your client's left to deal with, maybe because that insurance agent didn't run reports at the appropriate time. Next is the inspection. So again, insurance agents don't always tell clients about exterior inspections. They'll just say thanks for the business and move on until there's a third party showing up at their client's door knocking, just to let that homeowner know that, hey, we're on your property. We're going to walk around, take some pictures for XYZ insurance company. There's also interior inspections. I would say insurance agents do a better job of notifying clients of interior inspections, obviously, because the clients need to be home in order for those to occur. But these are two things that sometimes are often overlooked in the buying process. And then maybe a week follow up, then the agent says, oh, yeah, just as a reminder or first time notice, XYZ insurance company, they need to schedule an inspection to come into your home. And for some clients, that might not be a big deal. For other clients, it could be a huge deal and really put them into kind of a spiral. Maybe their home isn't clean. Maybe it's not ready to like have a professional walkthrough. And so again, I think understanding if there's going to be inspections after purchase is a great question for clients to ask and feel comfortable about before they actually again write a check. And then lastly, our discount documentation. So a lot of times in the quoting process, there can be assumptions made. Maybe they assume your clients have fire and burglar alarm, or maybe they see kids in household and they assume they're a good student, or they assume you're going to participate in telematics, and then they hit bind, and then you get that email saying, hey, please submit your alarm certificate. Please submit your client's good student. And your client's like, wait, what? I don't have an alarm. My kid isn't a good student. Why am I being asked for this? And then they reach back out to that new agent and they're like, hey, these don't apply. The agent's just like, oh, that's okay. I'll remove them. Now your price is going to go up. And again, if your clients moved for small savings, $100 or $200, those discounts being removed could now have just wiped out all of the savings and left them in a frustrated position and potentially a worse situation if the coverages aren't the same as where they were before. So these again are just some things to have your clients clarify before they write the check or hand them their credit card, to make sure claims reports have been run, understand any type of inspections that may occur, and then any documentation that will be needed to support the price they're looking at. And then what comes after? So I've mentioned inspections, and this is where I have seen so many shopping experiences gone wrong. It can be anything from a dog being on the property that's on the list. And the interesting thing about insurance companies is they do tend to think they're animal experts and they know what a pit bull is and they know what a German Shepherd is, and then it's on your clients to prove that their dog's not a pit bull or it's a mutt or whatever that may be, and it turns into homework for your clients all because they have a dog on premise that may not have been disclosed in the shopping experience. The other one is trees. I love trees. It's something that I think all properties should have more of. Insurance companies don't feel the same way. They see them as a liability, especially if they're overgrown and hanging, touching the house. And what all of this means is after the inspection occurs, your clients may have some homework to do. I've had it where the outside's overgrown, so there's just debris, unfortunately, kept outside, and or worst case is the inside is not accessible. And I have heard stories where, again, inspectors tried to go into homes and the individuals were hoarders, which is a huge fire hazard and liability risk. And so, again, that inspection quickly turned into a bigger issue, all because the client wanted to shop and save some money. And then there's also verification calls. So similar to inspections, but these are phone calls that after your clients buy a policy, the insurance company has a final verification to make sure all the information they have is right. And some of this can be whose name's on the title of a vehicle. And you're like, well, why does that matter? Some insurance companies, whoever has care, custody, and control can have that insurance policy. Other insurance companies, if you're not named on the title, or if it's, again, grandma's name on the title, but grandson's insuring it, that makes it ineligible. So those are the types of things we find when they start to ask about titling. Drivers in household, again, you may have a nephew that comes to stay here and there that didn't show up on the report when they first pulled, but now that you've disclosed that your nephew's there more than 6 months a year, they want to add him as a household driver. They also want to confirm the information on the app, and then it could potentially change coverages based on the call. So whether that's eligibility and or just the rating that the client got. And so just some quick stories. This one is you can't go back. So the client had been working with the family for a while. He then had a new family member get into the business. He moved away from an insurance company that he had been with for 10 plus years. He did have a water claim after that first policy move. He unfortunately in his first policy did have some grandfathered form, which gave him guaranteed renewal. And so now, with the new carrier, while it did have some modern policy, it did not have that guaranteed renewal. And at the first renewal, he was actually non renewed due to that water claim. And now the client couldn't go back to their current carrier. Well, let me rephrase. They could go back to their current carrier, but they could not go back to the old form that got them that guaranteed renewal. So again, this is just shows where sometimes longevity does matter. And if you wanted to make that move, you do lose quite a bit, and there's not always that opportunity to go back. So this client lost some features. They had to pay more for less comprehensive coverage, which there's nothing more frustrating than that. And then really it's just rooted back to policy education and not really understanding some of the items that were built into their old policy and what they were losing by moving to the new policy. This client had moved carriers just strictly for a lower premium. They moved without a full risk. They ended up having an inspection. That inspection again showed the trees overhanging. They had an unacceptable dog, and it was flagged and issued cancellation within 60 days. Unfortunately, this one left the client uninsured during hurricane season, which was terrifying. And again, in order for the client to get insurance, they had to cut their trees back and either exclude their dog from most policies, and or potentially get rid of the dog. This one they just ended up excluding, but they did struggle to find coverage immediately, and they ended up paying significantly more for that new policy. So this is where, again, just chasing price is not always the best point of direction. And so we've talked through a lot about shopping, but how can Plan help you and your clients be better shoppers? So, as we've mentioned, shopping just tells you what you're paying. Plan helps your clients understand what they're covered for and what they're not. And so when clients know their risk and goals, they do shop differently. They want to protect what matters most. So when they shop without Plan, they're again chasing those low premiums, missing important policy gaps. They make decisions based on emotion and price. They risk losing some grandfathered coverages. They're surprised by some of the things that happen after they purchase, and sometimes they feel vulnerable. And really think about shopping your insurance like going to get your car fixed. If you've never had your car repaired and you've had a car for 10 years, do you really just be like, "Hey, I haven't had my car repaired. I'm just going to go take it to someone and they're going to tell me everything that's wrong with it?" It might be I need new tires, it might be my windshield blades need to be replaced. But are those detrimental to me? If are my tires that bad that like it's going to pop while I'm driving down the road with my kids? Like there's just a lot that if I don't have something wrong with my car and I just bring it into a shop, they're going to tell me probably things that are wrong from like they need to be fixed today and things that are wrong that to consider to save for or work towards in the future. But when I go in to get my car fixed with a plan saying, hey, there's a knocking or a dinging or my tires are bad, I go in with an understanding of exactly what I want. And that's how it's shopping with Holistic Plan. You're going in and your clients get to understand what's covered. You've helped them identify potential gaps. They have a strategy for when they're shopping. They are proactive in addressing the risks so they're not surprised and they feel confident and protected. And that's one of the biggest things too that advisors give clients confidence in money. You help them feel good about their future and where they're going. And so it only makes sense that you also give them confidence about their PNC, especially when they go to shop it. And so this is a story that a client who had the Holistic Plan review before they went shopping. They initially had assumed they were overpaying for insurance. They completed the PNC analysis, their advisor did. And what they discovered was they did have a trampoline exclusion. They had no animal liability. They had low limits on their valuables, and they did have some lifestyle things in their life that they wanted to talk through with an insurance professional. So what they did is they used our analysis to define what actual coverages they need. They had a shopping strategy, not for savings, but alignment with the real exposures. And that's when they worked with that licensed professional to find a carrier that could handle their right needs. This client, they did not save money, and they actually paid a little bit more, but they solved major liability gaps that were $300,000 plus in exposure currently out there. They upgraded their limits, and the clients felt relieved and empowered knowing they were no longer exposed. So you can still get really good, warm, and fuzzy feelings with insurance by getting the right coverages, not just saving on them. And Holistic Plan really is the foundation for smarter coverage. So we identify risk early. So one of the great things about our reports is we have a note section. So maybe this isn't something that applies to your client today, but could apply to them in the future. And you just want to help identify that risk early. You can help them focus on what matters and what they actually value. So, whether it's replacing their personal property or being able to travel around the world and have liability when they rent vehicles, you can help them determine what actually matters. You can help them match with the right coverages to boost their confidence. And you're here to support, not replace the pros. So, really, what Holistic Plan does is again bridge that gap between all the knowledge you have as an advisor to those insurance professionals to help them get the clients the right protection they need. And then in 5 minutes or less, Holistic Plan helps educate your clients. We take them and move them from being consumers to prosumers when it comes to shopping their PNC needs. And again, giving them a roadmap instead of just blindly going out to the insurance agents hoping they're going to do what's in their best interest. So that is the end of my presentation. I think I have a few minutes for questions, and then I'm happy to also show a quick demo and the documents you would need to provide your clients to help them have the best shopping experience.
All right, Megan, you're getting a lot of comments for demo, please. Demo,
Okay,
please.
we'll jump into a demo real quick then. So, for those of you who aren't familiar with Plan, this is what the review will look like once you have uploaded the document. So, you would go to the client household screen. I'll just jump back there real quick. So, we're starting at ground zero. You would hit this create insurance report, and then from there, you would upload the documents. Our insurance report does act a little different than tax, and it does not generate automatically. So, I will show you this is what you would get once you've uploaded the documents here. So you would just drag and drop your home, your auto, and your client's umbrella, and you hit upload. You then get that email. And this is our declarations summary. And you would just go to this print button and you would provide this summary of their home, their current auto coverages, and their umbrella, along with our agent letter, which takes all of the red insights and turns them into questions for your clients. So now they can take these questions with our review to that insurance professional to get the correct answers and to have them shop for the right coverages. Um, and for those that have used our system before and would like to add a little more depth, we do have our replacement cost estimator. So this is where you can go in and help your clients calculate the rebuild cost of their home. You just simply type in their address. CoreLogic does pull this information a majority of the time, sometimes in rural areas, and things that have like unit numbers, it gets a little finicky, but overall great. You also have the ability to choose what type of kitchens your clients have. And if you're like, Megan, I don't know what semi-custom is, we do have a great knowledge-based article that will help define all of these for you. But the real importance here is giving your clients that ability to go and know what the true rebuild cost is, because you would be shocked how many insurance professionals are open to insuring for market value, even if it's not correct, because again, they just want to close that deal. And the difference between market value and replacement cost is market value is what your clients sell their home for, takes into account land, where the replacement cost is truly the cost of labor, lumber, architect plans, debris removal, and everything we need to account for that dwelling limit. And then the other great part to this are these lifestyle questions. So remember in that example, the client had mentioned they had a trampoline on premise. Oh, they also mentioned they have animals on premise. Maybe they own some vacant land. So depending on what you know about your clients, you can select these different lifestyle questions, and then from there, we will have additional insights pull up. So here's that trampoline exclusion. That's just, again, clearly stating they don't have liability coverage, even though they have made mention of a trampoline on premise. We also have our auto. So just by uploading those declaration pages, one of the insights that your clients may appreciate is this insured motorist being equivalent. That's important because right now, if they're in an auto accident with someone who has no insurance, they only have $50,000. And if you've been to a hospital for more than a few days, $50,000 probably isn't going to get them too far. So when they go to shop, they may want to shop their uninsured motorist limits at 250,000 to get the appropriate coverage for their family. And again, you don't have to memorize everything I'm telling you today. Plan has done a great job in putting in these info icons so you can better understand what these are and why they're important for your client to understand when shopping. And this is a prime example of if your clients go to an insurance agent and want apples to apples, they're going to duplicate this issue of under insuring them on their uninsured motorist coverage, to where if they come with the Plan review, they're going to see this call out here, which is going to prompt the insurance agent to say, oh, would you also like a quote with the increased uninsured motorist limits? Your clients are probably going to say yes. And now they're going to get pricing both how they want it, maybe apples to apples, but then how they should be covered with the matching limits. And they'll be able to compare the pricing. So maybe it's $30 more a year to increase these limits. Your clients are super happy. And that was all because you gave them the Plan review to take, and they didn't just go shopping asking for apples to apples. The other big piece that advisors can help add in with our report is in this umbrella and this estimated at risk value. So, again, we're going to give you a nice quick definition of what we want here. It's not usually their net worth, but we're really looking for those creditor accessible assets. And so, again, clients, when I was an insurance agent, they hated telling me their net worth, which is one reason I loved working with advisors, because one, they were a little more open to disclose some of this stuff to me, but two, the advisor could tell me, like, yeah, Megan, they live a very modest life. They have, a decent home, one car, but they're actually worth $10 million. If I didn't know that from the advisor, I might have only offered that client $1 million, $3 million umbrella. But now that I know their at risk value is 10 million, when they go to shop, I'm going to quote them a $10 million umbrella. And I know that because of the Plan report. So, again, these are just a few of the things that take your clients out of that apples to apples and what they've been taught, and really more into that control seat of here's my needs, here's what I'm looking for, and having an insurance professional help them. So All you would have to do is hit that print button again. Let me just use my side. Hit the print here, your agent letter print, give that to your client as a deliverable, and now they can go and shop their insurance needs at a hopefully better experience than just going and getting the apples to apples quotes. And we have seen this firsthand with advisors who use this with their clients in shopping. Again, at least feeling more confident and the results that they get in the marketplace and not feeling overwhelmed. Or again, once that insurance agent starts talking about endorsements, feeling like they're being sold something, it just gives them a completely different perspective when talking to insurance professionals, all because of the service you as the advisor provided them and preparing them for that shopping experience.
Thank you, Megan. Okay, so the next hottest question is how do I trial insurance and how do I buy insurance?
Great question. So we do have free trial available now on the subscription manager page. And I'm gonna stop sharing my screen real quick so I can pull that up. And you can also purchase there. So this all can be done in app. You don't have to reach out to support, and you will be able to trial it for 7 days. You do get access to all of the great features from CoreLogic to our lifestyle reviews. You're able to upload home, auto, and umbrella deck pages. So I recommend trying it on yourselves as advisors if you've never used our system. It is a great way. I think you would be pleasantly surprised at what you may find when you do it on yourself, even when working with your favorite insurance professional. And we get a lot of great feedback that, again, insurance agents love when their advisors bring this document to them. So, are there other questions that I can answer, Laura, while I pull up that free trial experience?
Yes, so one of the main questions was what is the pricing? So the pricing is $15 per household, and you do need to buy it for all of the households in your system. So that's the best part is you can provide insurance reviews for all of your clients. In my opinion, insurance is the next frontier for advisors. So insurance is where tax was a couple of years ago. So a couple of years ago, nobody did tax planning, right? Holistic Plan was the first company to really bring tax planning to the forefront. And today we're bringing insurance to the forefront. So doing insurance planning for your clients is a huge thing. And another question that I see that keeps popping up is do I need to be licensed for insurance to do this product, or can I just be an advisor?
Definitely do not need to be licensed. You just have to be an advisor. And again, you're just bridging that gap. You all hold so much valuable information that, when shared with insurance professionals that hold the license, can just help better protect your clients. So you definitely do not need to be licensed in order to use the product.
All right. And then we have a lot of compliments in here. Truly excellent job, Megan. Very knowledgeable and communicated very well.
Thank you. Thank you. And I apologize. My lovely
That's
internet is
okay. We can,
slow.
one of the things that we could do is we could send out a recorded demo video of how to start a free trial within your subscription. So right now we have a 7 day free trial for tax. We have a 7 day free trial for insurance, but it's really powerful in the sense that what it does is it will flag all of your clients, um, everything. So I see a couple people raising hands. If you could drop your questions into the Q&A, that's just, it's a little bit easier for us to manage. But one of my favorite things is that it categorizes things by red, yellow, or green so that you as the advisor can see like the biggest gaps or the biggest opportunities or the biggest misalignments and then push that to the agent letter to then share with your client so that you're not the middleman, right? You're giving your client the key information on what they need to do to update their insurance, and then they're going to their insurance agent. You're not going to their insurance agent.
100%. I see if a few questions in here, like who are the high net worth carriers? So the top five are Chubb, Cincinnati, Pure, AIG. Berkeley One has started to get into the space, but I would say those are probably the most common in the high net worth.
I see a couple questions on can you buy insurance alone? So for financial advisors, we're not recommending that. We do have a separate product for insurance agents, but for financial advisors, you would need to buy tax and then insurance as a separate product.
Yeah. And you get a nice discount when you bundle insurance with tax. And really, the great thing about our insurance tool and what I've seen even on the broker side is to large where this is your client just starting out that's a renter to your number one client in your book that's worth $30 million. The PNC tool can support that entire rate, so you don't need to know, is my client spending 25,000 so I can send them to my insurance partner. Oh, my client doesn't have any insurance exposures, they're just a renter. What you'll learn is, regardless again of where your clients are in life, our system has an insight or something that will be valuable to them and impactful, and give them a story to tell about you as the advisor outside of money management. They'll be able to say, hey, I'm a renter, but I like to travel. My advisor taught me about worldwide liability coverage. My advisor taught me about my dwelling replacement costs. And again, those are stories that they take to the kitchen table, to the dinners out with friends that they talk about. And less than 2% advisors are doing this. So it's a great way to, again, tell a different story, but for that entire book that you get to support.
Yeah, I mean, every client has an insurance horror story, pretty much, or they have a friend with an insurance horror story. And so for you to kind of be that saving grace is really, really powerful. Okay, Megan, two more questions, and then we're going to take a quick break after this. But so the first question is, do I need to have a premium to get access to insurance, or can I be used on the basic subscription?
It can be used on basic. So it can be added to either on the household pricing.
All right. And then another question is, are we selling insurance or are we directing them to their PNC agent?
We are directing them to their PNC agent. We do not sell insurance. That is not our intent. It really, again, is just to bridge that gap and allow insurance agents not to be order takers anymore and to fill that risk management shoe that they really want to, and to kind of share that information. But you will not become an insurance professional. I can promise you. You will become best friends with insurance professionals when you use this system and connect clients, but you will not become one yourself.
Thank you, Megan. This was
Of
really,
course.
really powerful. Megan always does such a great job. I love having her on here. So let's show
Thank
Megan
you all.
some love in the Q&A. If you could just drop her, some compliments. I know she loves to see those. So she puts a lot of work into these webinars and they're always so educational. So thank you everybody for being here. Thank you, Megan, for being here. I really, really appreciate it. So
Of course. Have a great day. Thank you all.